morning, everybody. Welcome to Value Investors Edge Live. We're hosting James Catlin, our head of macro research at Value Investors Edge. Hey, good morning, James. Thanks for joining us.
Hey, good morning, Jay. Happy to be here.
Thanks, James. And I'm really excited, first of all, to have you here and learn from you, but to do all these interviews overall and to settle back into this. So the last time you and I sat down for one of these was back in January. So it's been a while. What were some things that caught you off guard where 2023 was a little bit more dynamic than maybe you or I thought?
Yeah, containers held up quite a bit longer than I thought they would. And even still, the time charter rates are fairly decent above where they were in the pre-pandemic. So that's been really interesting. And, dry bulk. I would have expected, as the global economy stabilized, for China to be introducing more of a stimulus. They're not doing that. It makes me kind of wonder if they're sort of reassessing what role it might play in the market, because obviously the early 2000s model is not going to be able to play out in the 2020s and beyond for several reasons. I mean, debt load, magnitude, everything like that. But for the most part, gosh, it's been a pretty manageable year for shipping right here, and I'm grateful for that.
Yeah, no, it's certainly been a great market. I think one other little surprise has been, and Omar Nokta, head of research at Jefferies, was just on with us last hour, and we were both kind of talking about this as well, is the LPG markets. I mean, those things, all-time record highs, right? And this is at the time of year when rates are supposed to be falling. Do you have anything to add on that? Any thoughts on this Panama Canal congestion, drought, and all that stuff?
Yeah, I mean, the LPG market's probably surprised a lot of people right there. It surprised me a little bit with how strong the rates were as the supply was actually coming online. But looking forward, it's absolutely one of my favorites. And that has to do both with the waning supply introductions and the expected demand growth for LPG. And that comes down to a lot of reasons. It could be out of China. It could be the oil prices right here currently are going to have an effect on the market that's going to probably introduce more drilling over here in the US. Of course, we want those LPG exports out of the US because they represent the longest haul. So there's a variety of factors that make it extremely appealing to me right now.
Yeah, thanks, James. And back to where we were a few minutes ago, you mentioned a bit of a surprise at how China reopening was just lackluster, and dry bulk rates have been pretty poor this year. What about today, though? Is it time to speculate on dry bulk? Should we put some more chips on the table? And if so, when, James? When are we going to see this improvement? I mean, I know the spot rates are going up now, but I mean, I'm talking about sustainable, right? The FFA curve lifting, time charters lifting. When might that happen, if ever?
Right. Yeah, it will happen. But there's always market cyclicality is a given, so that we will see another sort of elevated demand episode there for dry bulk. But like you said, when is it going to happen? So much of it in the past is revolved around China. And like you said, there was that lackluster reopening. This is one of those things where it might take a little while. So yeah, short term, I mean, we're entering the seasonal strength period here for dry bulk. So it's a positive sign that rates are responding to that right here. But do I see any reason to go in long and sustainable on dry bulk at this point? No. And it has to do not just with China, but also the broader economy here at large.
Let's talk about some favorites. Your favorites, not my favorite. You mentioned Navigator. I like that one. What are some other favorite names, James, where you've taken your macro research and you've said, you know what, I'm so bullish that I'm going to actually go out and buy some stocks here?
Gosh, the ones that I've added to the most over the last few months, and of course, I like these little dips that come around. Shipping always gives you these dips, and so you get these short-term events that take the market down. But if your long-term analysis, your conviction remains intact during these short-term events, these short-term dips, that is the optimal time to go ahead and start placing your bets if you're going to do so. I use some of these dips lately to add positions to International Seaways, Sting, Scorpio Tankers, and EURN. So obviously, I mean, LPG was in there, product was in there, couple tankers. That's where I see the most opportunity. That's where I'm putting my money. Yeah, those are the four that I've added to recently, and the three segments that I'm really watching.
Yeah, it's a bunch of solid names there, James. I can tell that you're playing towards the large market caps. Very good answers. James, thank you so much for your time. I know we ran over. Thanks to everyone for joining us as well this morning.
Oh, thank you, Jay. I love doing this, man. Thanks so much for putting this on, and I really appreciate it.
Absolutely.